What is the best dividend ETF that you can buy? A high-performing dividend ETF is an attractive option for long-term investors who seek steady income streams while benefiting from the potential growth of publicly traded companies. Investors who seek to diversify their portfolios for the long term with low expenses, high yields, and capital appreciation should consider ETFs as a suitable investment option. One of the highest performing dividend ETFs is the Vanguard Dividend Appreciation ETF VIG. The Vanguard Dividend Appreciation ETF VIG tracks the Nasdaq US Dividend Achievers Select Index, which comprises of companies that have a record of consistently increasing dividends over a minimum of 10 years. An actively managed fund, the VIG's portfolio has holdings in blue-chip stocks such as Microsoft, Visa, and PepsiCo. The ETF aims to provide investors with exposure to stocks with a history of dividend growth rather than a high initial dividend yield, making it appealing to those looking to invest for the long term. The VIG has consistently outperformed the broader market index over the past decade, with an average annual return of 12.57 compared to the S&P 500 average of 9.68. The ETF has recorded impressive returns, both during a bear or bull market, in the past, making it an excellent choice for investors with a long-term horizon. The VIG offers a steady stream of income to investors, with a current dividend yield of 1.7. The ETF has a record of increasing its dividend payouts annually, with an average annual increase of 8.2 over the past decade, making it an ideal option for investors who value steady dividend growth. When evaluating dividend ETFs like VIG, investors should consider some critical metrics. These include the expense ratio, dividend yield, and earnings growth. The expense ratio is an essential metric that speaks to the cost of owning an ETF. For the VIG, investors enjoy a low expense ratio of 0.06, which is significantly lower than most dividend ETFs. The dividend yield is also a crucial metric, indicating how much dividend income investors can expect annually. With a yield over 1.7, VIG is one of the highest yielding ETFs in the market. Investors should also consider the ETF's earnings growth, which reflects the ETF's ability to increase its payouts, making VIG an attractive choice due to the consistent growth in earnings. Though this video highlights the VIG ETF as an excellent choice, there are other dividend ETFs available such as the iShares Select Dividend ETF and the Schwab US Dividend Equity ETF. Each of these funds has different metrics, costs, underlying indexes, and objectives. While the iShares Select Dividend ETF focuses on higher yield companies, the Schwab US Dividend Equity ETF offers a more expansive range of companies. Compared to these ETFs, the VIG's biggest advantage is its low expense ratio, reliable earnings growth, and history of outperformance. These features make VIG a compelling choice for investors looking for steady growth and income in their portfolio. Long-term investors looking for a high-performing dividend ETF can rely on the Vanguard Dividend Appreciation ETF VIG. The ETF's portfolio is carefully selected, considering companies that have a track record of increasing dividends annually. The VIG has outperformed the market in the past and offers investors an attractive combination of low expenses, high yield, and dividend growth. Compared to other ETFs, such as the iShares Select Dividend ETF and the Schwab US Dividend Equity ETF, VIG is an excellent choice for investors who value consistent performance and long-term growth. However, individual investors should consult their financial advisors to evaluate their unique financial situations before investing in the VIG or any other investment product. What do you think? Is Vanguard a good buy? Please comment below. Thank you for visiting Free Market Economy.